We'll put out some technical levels, etc. in a bit, but let's welcome in Amit Jeswani, founder and CIO at Stallion Asset, who's with us. Amit, good to have you with us here. Thank you very much. Just to understand what the market is smelling, is it smelling something? Is there's some confusion ahead of the budget? There is the FOMC. What are you picking up really? What's going on? Very near term.
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. This is just normal 1% plus minus. We don't even have a view. We don't even see like what is happening so closely. But why was the market up 2% yesterday? That remains a suspense. And why is market down today 1% also remains a suspense. So these are very random moves in nature. I don't see any material. But of course, we do believe that we have entered a phase of volatility expansion, and we all investors, traders, should be prepared for very high volatility for entire 2024. It's not going to be like 2023, which was like a straight line move. 2024 is going to be way more volatile.
Any big changes that you've made in the last 1 month, Amit, to your portfolio in terms of additions, deletions, weighted changes?
So Rima, we've added Polycab lately. We sold Polycab, and once the income tax news came, the first time when it got raided and etc. This is before the PIB press release got issued. We had got the weights down, and we have added Polycab back to our portfolio, and it's our number one position as of today. So it's about 7.5–8% of our portfolio. So that is so it's at 65,000 crores market cap. We expect 1,800 crores of profit this year. We expect 2,300 crores of profit next year. So it's at 28 times FY25. And what we've seen, Rima, is that people forget markets have a very short-term memory. And like Ratnamani had an income tax rate similar to this, 400 crores of unaccounted revenues got found. And the stock, this happened in 2021 November. The stock has moved up 3 times from there. So, of course, there's a risk involved in the Polycab trade. But if we go right, we should double our money in next 1 year.
Okay, all right.
So
hi, Amit.
That is Sorry.
Yeah, complete your point, Amit.
So yeah, so there's a risk involved. We know the panic bottom of the trade was 3850. If it reaches there, we'll see what to do. But right now, we believe that Q4, even if you see what peers are doing, Nigel, be it RR Kabil, the growth was 11% yesterday. KEI growth was 15%. And Polycab was not working for last 8–9 days this quarter. Yet the growth was 17%. Typically, Q2 is better. The analysts are expecting 1,800 crores PAT this year. We expect 1,850 crores. But the Q4 should be a very, very big quarter, which is typically the best quarter for Polycab. And Polycab should be back to the 30% volume growth kind of numbers which they are doing. So all right. If we go right, we should make a lot of money. If we go wrong, we'll lose some money and move ahead.
Okay, all right. Amit, the last time you joined us as well, you were talking about a growth company. You mentioned JTL that you all had gotten at around 200. And you said you all had preference on that one rather than APL Apollo. And, that's done pretty well for you all. I'm looking at the footwear space. I know there are other big names in there like Metro. But you have gone in and you have bought Red Tape, I believe, as part of your portfolio. Tell us the rationale out there.
So Nigel, Red Tape, if you see the numbers yesterday, the growth was 29%. We bought Red Tape during the Mirza demerger, but we chase growth. We want companies who can grow faster than the industry. If you see the last 10 years, while a lot of stories have been said about Relaxo, the Relaxo growth rate for last 10 years has been 11% CAGR. And yet Relaxo gets 100 PE multiple. The Metro also gets closer to 90 PE multiple. The growth this quarter was just 6%. We have bought Red Tape in our portfolio. We had positions at 3,000 crores market cap, but nothing changes at 8,000 crores market cap as well. As of now, Red Tape trades at about 45 times FY24 and about 30 times FY25. 33 times FY25. So Red Tape should do 250 crores of profit. This is one company, if you see data pre-demerger, the company, this was part of Mirza and it got demerged out of Mirza. When it was part of Mirza, it was growing at about 25-30% for last decade. And shoe companies do get very high multiples. The ROCs of Redtape is around 40%. When you get 30%, 25-30% growth, 40% ROC, 30 times 1 year forward, we typically bet large, and it is about 6% of our portfolio as of today. So Redtape is gaining market share from all other players. Look at Bata. I've not seen only growth for a very long time. Look at Relaxo, very weak numbers all the time. You want a leader. Campus last quarter growth was minus 22%. So even when the industry is not doing well, you want to be with the guy who's gaining market share quarter over quarter, reinvesting capital at 40% ROICs. And our bet is on Redtape.
Okay, so those are some of the consumer names and the thought process behind them. Amit, hi, good afternoon. You know, I'm looking at the holdings for the Stallion Asset Core Fund. And here I see that financial services is still the lion's share of it, right? Almost 34% of the fund is financial services. So, you know, what would be the key holdings over here? And what's your thought now, given all of this uncertainty and this whole volatility around the larger private banks?
Actually, our lending businesses that we have in our portfolio would be about 11-12%. Capital market would be 15% of the portfolio. And then we have Policybazaar, which is playing the insurance. Policybazaar's got results today. We might lose or make 5-10% tomorrow. I don't know. But so that is how our financial services, out of the 34%, our lending would be about 11%, 11-12%. Capital market would be about 15%. And that insurance player, Policybazaar, would be another 6% of the portfolio. So that is how. So we don't have too much exposure to the lending business. Even the lenders that we have, like 5-Star or Bajaj Finance, where we are losing a lot of money today, or Arman Finance, they're all growing at 30% plus. 5-Star grows at 44%. Arman goes at 50%. So in lending, we don't like lending as a business model. The only reason why, so we will never buy a lender if we have 15% growth. The only reason why we buy a lender is if we see extraordinary growth of 30-40%. I will never buy a leveraged business for 15% growth.
Okay, all right. Amit, you know, you seem to have this contra way of investing as well, like Polycab, right? You're going in there, giving it a shot, you believe the business is good. Angel One, that's a stock I think you all got in early. If I'm not mistaken, you all got out as well, but it's still part of your portfolio, so you'll have gotten in. Now the numbers, you know, you would be saying that there's some kind of a miss here and there, but the stock corrected close to 15% post its numbers. Did you all add more? What is the position currently on Angel One?
So we initially bought Angel at about from 1600 to 1800. We were buying aggressively. We sold a decent size Angel at 3,600, and now lately we've gotten back. So we keep decreasing our weights. We believe the only reason Angel added 25 lakh customers in last 1 quarter, 25 lakh. IIFL SEC added 50,000 customers. I'm just giving you context. 5paisa lost market share. So there was one player. The PAT of Angel, what markets were estimating, was about 320-330 crores, because they added a lot of clients. When you add about 25 lakh clients, you have to pay broadly 650 per client. So they invested about 160-170 crores a quarter on client acquisition. Of course, as soon as the client gets acquired, doesn't mean they start trading. I expect on Feb 5th, based on data of NSE, BSE, MCX and cash market volumes, when the data on the 5th of Feb comes out, Angel gives out monthly volumes of number of trades. That should be up 65% year over year. And we believe it's a real challenger to Zerodha. This year, Angel should do about 1150 crores of profit. Next year, we expect Angel to do about 1600 crores of profit. Right now, market cap is about 24,000 crores. So we are buying Angel at 15 times FY25. Hopefully we make money. I don't know what will happen, but we keep tracking execution. Till the time Angel is gaining market share, it's about 28% market share of derivatives market, 16% market share of cash market. You want a leader who's gaining market share. See, there is no other player who's gaining market share at the pace at which Angel is doing. And once you get that pattern, we of course keep doing up and down because we have to make money for our clients and we have to manage their risk also. The risk reward as the stock keeps going higher keeps changing, and we have to make changes to our position sizing. But right now at 2,900, at 3,200, 3,100, we kept adding and increasing weights of Angel. So Angel is a part of our portfolio, and I hope when we see the next quarter, hopefully it makes a new high. It will cross 38, 3,900. That is what I think. I'm a dreamer. I think they're very big, and I'm always optimistic about my positions.
No, you have to be right. I mean, that's very well put and explained. Amit, yeah, and contender to zero. I mean, you could say Grow is also a contender, but an unprofitable contender. Of course, Angel makes a lot of money, as you said. So that's a different and a key one. What about the Adani Group stocks, Amit? I mean, I'm just sort of throwing that at you. Have you looked at any of them? Again, there is that contrarian aspect which may come. None of the institutional fund managers really own it. One or two here or there. There's growth visibility in the areas that they're focused on in a big way over the next number of years. All these other issues, investigations, everything is behind. Have you looked at it? Have you done any work on it?
The problem, Prashant, is that we just looked at it. We never pressed the button. So we've never been, unfortunately, I should say, we've never held Adani Group stocks in our portfolio. The market caps, the P's, while they keep gaining market share, they are number one executors, I should tell you. But we don't understand what is margin of safety here. And when we don't understand what is margin of safety, we find it very, very, very difficult. And they've just started doing con calls last quarter. So now we'll start getting more clarity on, for most companies, they've started con calls last quarter. Now we'll try to understand the business better, because reading an annual report once a year doesn't, but the group is already 24 lakh crores. Now you have to, so the big money got made when the group was 2 lakh crores, 1.5, 2 years back, to 24 lakh crores. And now you have to really work hard to make money in Adani. So Adani will not have that same kind of move what it had in the last 5 years. And there's certain people in my team who are working to find the next Adani. So we are working on B2G companies, but we've not made any investments yet. And we find very, very difficult to understand the next quarter or the next 6 months in the Adani Group companies. But they are great executors. When you look at as a picture for 5-10 years, you'll be awed by the kind of scale up that Adani does. At the price at which they acquire companies, it's unbelievable. So they're great executors, just that we've not been able to be so smart to acquire them at cheap prices.
All right, Amit, we'll leave it there. Great conversation as always. Thank you very much for joining us with that perspective on a number of businesses, number of stocks, and how you're thinking about the market as well. Where are the days low?
Thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.